Hi there. Tangible or physical money has been around for so long we can't imagine money in any other way or form. Of course, there's also the intangible money represented by assets, etc. But in everyday language and thought, money means notes and coins that you can touch and use to pay for goods and services. Since the days of beads and shells, money has been physical. In recent times, however, a new form of money seems to have made quite a splash. I'm referring here to crypto, or what people commonly refer to as cryptocurrency. The question may well be asked, are the days of physical money numbered? This is the subject of our discussion today. It is also part 3 of our series on money. All future discussions on money will expand on this issue. Before I continue, however, do visit our website where I curate news and publications from international financial organizations and central banks. Topics cover a wide range of financial and economic issues that affect individual countries or the world economy. For instance, COVID-19, inflation, or the war in Ukraine. Please also subscribe to this channel and be informed whenever we publish a new video. As I indicated in the intro, many people are by now familiar with crypto, which they regard as some form of money. Whether or not cryptos can be regarded as money or currency in the truest sense, however, is debatable, but they have captured the public's imagination, and in many instances, they are real money too. I'd refer you to part 1 of our series for a definition of money, and you can then come to your own conclusion on cryptos. Of course, cryptos are privately generated and privately owned, unlike real money, which is publicly owned or at least issued by the central bank on behalf of the state or the public. This is known in the economic lingo as fiat money. Central bankers were very upset by the emergence of crypto. In many ways, I'd say they were caught off guard. Many threats were issued. Alarm bells were ringing in every central bank as they perceived what at the time seemed to be their death knell. If private actors could issue their own currency and the public flocked to these currencies, what role would central banks then be playing? Indeed, how effective would their conduct of monetary policy be in such an environment? Banks were also shaking in their boots. After all, cryptos were being issued by big techs, and this, on top of other fintech and decentralized finance developments, was threatening the very foundation of banking or financial intermediation. In time, however, central bankers have regained their traditional composure. This is in large part to a realization that crypto is really nothing more than normal innovation by the private sector, and that central banks can and should harness this new technology for their own ends. Thus, the central bank digital currency, or CBDC for short, was born. In one light-hearted sense, CBDC represents central banks' response to crypto. That is, they are developing their own official cryptos. In another, more fundamental sense, CBDC was born out of a realization that distributed ledger technology, the technology underlying cryptos, was available for central banks to harness for their own innovations. In an increasingly digital world, why should money or currency not evolve? Indeed, digital currency, at least in theory, is perceived as having intrinsically superior qualities compared to physical currency. Various pilot projects have been undertaken for proof of concept, simulating different scenarios, for example, cross-border transactions, and it has been shown that CBDC is superior. Currently, there are about 100 central banks engaged in CBDC research at varying levels. The Bahamas became the first to issue a digital currency, the cent dollar. The Nigerian Central Bank has also issued its own CBDC, thereby becoming the first in Africa and among the first in the world to do so. El Salvador opted to go in a different direction. Instead of issuing a CBDC, they went for a ready-made solution by adopting Bitcoin as a digital currency. The Central African Republic has also followed the El Salvador example and adopted Bitcoin. Among the large economies, the People's Bank of China has been running a CBDC pilot with a currency called ECNY. The European Central Bank and the Bank of England have begun formal projects to investigate issuing CBDCs, but they are way behind China. And the UK House of Lords issued a report that was very skeptical of CBDC. Interestingly, the title of the report was the same as the title of a speech by US Fed Governor Waller. The Bank of Canada and the Bank of Korea have also followed the Fed's skepticism on CBDC. Whatever happens, the genie cannot be put back in the bottle. Digital currency is really the future of currencies. As the lead director on the ECNY put it in a panel discussion, the train has left the station.